traders, I'm back again with another video, and today I like to take time to discuss with you a trade opportunity that I'm looking at on the Euro US dollar, a chance for a long trade here. We're looking at the 4 hour time frame here, and we're looking at basically price bouncing down to this Kijinsen here, and also this level here, which is the previous week high at 1.129, and then the previous month high at 1.12661. Now those levels, we'll have to go to the daily time frame to look at those levels and to see. I want to make sure we don't get faded here. So we'll go to the daily time frame really quick to look at the daily. So the daily bias overall is bearish, okay? So we should be looking at this bias, and you can see this daily bias overall is bearish, but we've crossed over the Kumo here, so that makes the daily bias bullish. Okay, it just turned bullish, short-term bullish, what, about 5-6 days ago, 6 trading days ago. You have a TK crossover here, a Kumo twist here that's bullish. So your future's bullish. You have a TK crossover here that's bullish, and then you have price above the cloud and Chico span above price. All right, so Chico span is probably finding resistance here at this level somewhere in this cloud. Okay, but the thing here is also here's a major resistance level above us, so it's going to be 1.1482. That's going to be a major resistance level, and when we hit that level, we may find resistance. So the trade may not go any farther, and we may find the trade go back to the overall trend here, the primary trend, which is bearish. All right, so you may find price, you may find that hype happen when price hits this level. So basically, we're about currently from that level, we're almost about 200 pips away from that level. So we still have a good trading opportunity to reach that level and take a nice trade to get to that level. So we're going to look at that and see what we could do to get into this type of a trade right now. So we're on the 4 hour here, and you can see we have a crossover, TK crossover, that's bullish. It's a strong bullish signal because it's above the cloud. Now I don't take the TK crossover signals because a lot of times you get those signals, and here's a signal right here, and once you get the signal, what happens, price comes back and retraces back to near the Kijinsen. All right, so therefore I don't usually take a lot of these TK crossover signals. You'll see that quite often. And then the next thing we're looking at here, usually when you see a cloud get thicker here, and that's a lot of volatility, and then the market's moving up and down, and you could see right here there was some volatility at this move here. Well, there's not as much volatility in the markets. The cloud is still angling to the upside, so we really like that, right? And then the next thing that we really like, we like the price action that we see that's developing at this level right now. So we need to wait, though. We need to be patient. Okay, so my first level that I'm looking at entering the market is going to be basically right above this candle here. We have to wait and see what this candle closes at. So I'll be about 113, 104. All right, in that area. So you want to be just a little bit above that level. Now, depending on what happens with this candle, if this candle doesn't close as is, as a pintail as it is, then we'll probably change our bias, because we may see the market still continue to move lower, and then we may get a better entry down here. So don't be quick to jump the gun here. So a lot of times, usually you want to see price break a previous high. So you want to see price break this level. You want to break this previous high level to enter the market. Now that's a little bit of a distance because we'd have to have our stop loss below the previous low. So you're covering that whole range. But if you're patient and don't jump at this pintail here, you may see price come even closer to this Kijinsen, and then you may see another price action entry that may be even better. So if you just be patient and wait on the trade setup, then you may get a better opportunity. So what I would look at is right now, as is, I'm probably going to look at this level here. So let's see what the top of this level is here. All right, let's see what this level is. The high is 103, is 13094. All right, so 13094. Let's put that, let's make this line that 13094. 094. So that's the top of this wick right here, off of this doji right here. I mean, off of this pin bar here. All right, so this is a nice little hammer that we have, and that's the level that we would look to enter. Now you want to be a few pips above that level. So a few pips above that level will give you uh, probably about, looking at roughly 103.098 or somewhere in there. You could go even a little higher, but you just want to be a few pips above this level. All right, but then to really see the market moving and know that the market's starting to break, starting to move to the upside, you want to see the market break some previous highs. All right, so the next previous high is this level here. So this is where you would really want to break, and that high is at 13917. All right, so that's where you would be able to really know the market is moving. Now you'll see if you're patient and look at this, because this is 4 hour candles. So even at the close of this candle, if I wait, then my next 4 hour candle, if it stays lower than this candle, doesn't violate this level here, then you have an opportunity to get a better entry. All right, so that's why I want to be patient here, and I'll probably have to update this video to show you guys what really happened or what's really going on. But if not, just remember that this is our main level right now. But really, to see the market to start really moving, you want to see the market break this level, because what could tend to happen is this right here. So we have this previous high right here, and then we have this level right here. All right, so we could even move it up to this level, because this is the previous high we found support at. We found resistance here, and then the market dropped a little, then violated and came back to that level, right? But if the market stays in that, if the market finds support at this level but doesn't violate this level, then you're in a range here. So you have to be careful of that. So watch this cloud, and you'll see if the cloud's getting bigger. Now you can see that the bottom of the cloud, which is going to be sync out span B in an uptrend. So this is span B. If that's starting to flatten out, then you know that you're probably getting into that ranging level. Also, Kijinsen will flatten out here. So if Kijinsen flattens out, that means we're pretty much ranging. You got to catch these ranges beforehand, because a lot of times they'll mess up your trading, because the thing is, you're thinking that the market's going to continue higher, and then the market looks like it's going to continue higher, and it comes back, takes you out, and it keeps doing that. And if you keep entering the trade, then you're just losing money. And then when you do get a good trade off, you're trying to make up what you already lost. So you got to catch these ranges pretty quick. Okay, but if the market's going to continue to move higher and attack this level above us, which lines up right here, that 114,828 level, that's where our target is, then the market will violate this level and continue higher. Now we have to find where we're going to find that support level. So right now it's looking like this may be the level of support, and this will be a nice place to enter the market. But again, we still need to be patient and wait. Okay, so on your stop loss is going to be always below the previous low, or Kijinsen. And since Kijinsen's so close, it'll be down here a little bit below Kijinsen, so about 122 or somewhere in that area. All right, so then your target will be, as we said, 114,828, and we have to wait to see what's going to happen here. So what's going to be important to us is this, all this here. The first main thing that's important to me is this area here. Okay, I don't want to see price close below this level here. And then once price closes above this level, then I know that we may be moving higher. Then ultimately, if we violate this level, then we're probably good to go to this next level. So currently you have to wait for this level to be signified to see what's really going to happen here. So you need to see if price is going to, the next 4 hour candle, what it's going to do. Is it going to close lower until we find support somewhere in here? Because price can come all the way down here. You have a next candle, so we could be 4 or 8 hours away or more. So you never really know. You just have to watch and see what's going to happen with the market. So hopefully you guys understand what I'm looking at here and how I'm getting into this trade. Okay, so I'll just be patient and wait. I'd prefer to see price come down a little closer, and then find support on my next 4 hour candle, where this level will be surely the previous high level that I would really like to enter at. All right, then I'll know the market's starting to move after we break this level, and then I won't even be really concerned about this level as much. Okay, but we definitely want to see price finds support in this area. We don't want to see price close lower. Okay, but if price does close lower, then we'll have to reevaluate, and we'll still probably keep our bias to the upside until we get a Kumo breakout to the downside. All right, so basically all I do is trade levels of Ichimoku and levels of support and resistance, and that's what keeps me safe. I like to trade at the ceiling or the floor. So I like to be at the floor or the ceiling. I never like to be in between. So this trade here will keep us right at the ceiling. I mean, right at the floor. You don't want to be in the middle of a trade. And that, when I say that, I mean you're in the middle of the ceiling and the floor. There's where you find most trouble, and you have to have a bigger stop loss, and you never really know where the market is going. If you're close to the ceiling, if you're close to the floor or the ceiling, you always have that to back you up and to place your stop loss. So always remember that. So the farther away you get from those levels or those areas, the bigger your stop loss, the more your risk. So that's what we're looking at. We're looking for a price to find support down here and continue to the upside, continue with that short-term bullishness. But overall, the market is bearish if you look at the bearish trend. So again, this is probably just a correction. We're trying to catch some of that correction before we ultimately go back to the downside with the overall trend. All right, so that's all I'm looking at right now, guys. Hope you enjoyed that, and I'll be back. Until next time, God bless. So long.